The world changed on April 2nd. A single announcement from the White House triggered a chain reaction across global markets. Tariffs, massive ones, were back on the table. Stocks plunged, currencies collapsed, and investors scrambled for safety. But what exactly happened? Why did it happen? And where do we go from here? Stay with me as we unpack the chaos that began with one speech and the dominoes it set in motion. First, a quick disclaimer. This video is for educational purposes only. I am not a financial advisor, and nothing here should be taken as financial advice. What you're about to hear is my personal view based on research, experience, and market observation. Always do your own research before making any trading or investment decisions. Welcome to Markets and Global Trends. On Wednesday, April 2nd, President Trump took the stage with fire in his tone and retaliation in his message. No punches were pulled. In an aggressive address, he accused both friends and foes of abusing the United States through unfair trade practices. What rattled the markets, though, wasn't the speech, it was the chart. A simple graphic showing reciprocal tariffs pulled the rug from under the earlier optimism. Investors quickly realized that Trump wasn't bluffing. Tariffs on Chinese goods would be set dangerously close to the 60% figure he once threatened on the campaign trail. The planned tariffs reciprocated and amplified. The Trump administration laid out its strategy with surgical precision, 10% tariff on most trade partners. Countries with the most trade barriers against the US, they'd face mirror tariffs half of what they impose on America. Asia bore the brunt. Some nations faced tariffs exceeding 40%, and China, a crushing 34% levy was slapped on top of the 20% already in place since Trump's second term began. Elsewhere, and major Latin American economies saw lighter tariffs, around 10%. The EU, 20% duty. Canada and Mexico, surprisingly exempt, at least for now. Curiously, sector-specific goods like steel, aluminum, gold, and copper were excluded from these blanket tariffs, implying separate taxation was coming their way. The timeline: the storm unfolds April 3rd, 25% kick in. April 5th, base of 10% go live. April 9th, the reciprocal rates are scheduled to take effect. It's the biggest tariff hike since the infamous Smoot-Hawley tariffs of the 1930s, a move that many blame for deepening the Great Depression. And the markets? They weren't ready. Clear signs of shock. S&P 500 and Nasdaq plunged, dragging global stock markets with them. Treasuries, with yields sinking as investors sought shelter. High beta currencies, like the CAD, AUD, and NZD, dived against safe haven giants like the JPY and CHF. Commodities felt, to oil and copper collapsed under pressure. The murkier movements, CAD initially gained against the USD, before crashing. Bitcoin, once the rebellion asset, held up surprisingly well but fell from the euphoric 100,000 peak. Gold spiked, tumbled, confusing even seasoned traders. The dollar index then clawed back ground. EU USD and GBP USD, brief rallies followed by sharp declines. It didn't take long for Beijing to respond. On April 4th, China retaliated, imposing a 34% tariff US imports. This counterattack deepened the wounds on risk assets. Stocks fell harder. Commodity-linked currencies, especially the AUD, got slammed. Why? Because Australia's economy is tightly intertwined with China. And when China suffers, the Aussie dollar suffers even more. China's tariffs go live on April 10th. What comes next? At the time of this recording, we still haven't heard from key players like the EU, Switzerland, Australia, and the UK. The UK is currently negotiating behind closed doors. Retaliatory tariffs could follow any moment. Which brings us to the most difficult scenario: what if everyone retaliates? Imagine a full-blown tariff where no exceptions, no exemptions. That's where things get grim. Worst-case scenario: recession ahead. If the current path holds, and countries retaliate fully, consumers stop spending. Risk sentiment deteriorates even further. Investors pile in too, sending treasury yields lower. Already shaky, markets spiral deeper. AUD, NZD, and other Asian currencies slide into new lows. JPY and CHF surge even higher. Oil crashes under the weight of looming recession fears. Gold, a wild card, spiked, then crashed, direction unclear. Global bond markets, capital flees to safety. And there's more. We're looking at a textbook setup for stagflation, slowing growth and rising prices. Tariffs raise, hitting consumers and businesses alike. Inflation surges. Even as growth collapses, the Fed could be at interest rates just to prevent a recession from spiraling out of control. There's even chatter of de-dollarisation. What if global traders start avoiding the USD in transactions? That would be a seismic shift in the world's financial system. Meanwhile, supply chains get rerouted. Companies scramble to adjust to the new tariff landscape. Let me be honest, this is all unfolding rapidly, and no one knows exactly what April 9th will bring. But the signals are loud and clear. Stagflation is real. Recession is looming. In my view, relying on tariffs to force factories back into the US is flawed logic. Even if it works, it takes 5 years on average to bring a factory online. Planning, permits, construction, staffing. Can consumers really be expected to shoulder higher prices for 4 to 5 years while that happens? I don't think so. Yesterday, I recommended going long a AUDCHF, but with the way things are playing out, that setup is no longer valid. Right now is not the time to go long. Let the dust settle. Wait for clarity around April 9th or for some positive news on tariffs. If things escalate, short a AUDCHF or AUDJPY might actually make more sense. So what's your take? Do you agree with this view? Are you preparing for a recession? Or do you think this is just another bump in the road? Drop your thoughts in the comments. I'd love to hear your analysis. And if you found this breakdown helpful, don't forget to like, subscribe, and share it with fellow traders. Thanks for watching Markets and Global Trends, where we make sense of markets, one trend at a time.